Is Trading 212 safe with your life savings? It's a question I ask myself often, and I completely understand why others are asking it too. Trading 212 is a relatively new stockbroker in the UK. It hasn't been around as long as the legacy brokers such as Vanguard, IG Group and Hargreaves Lansdown. These brokers are known for comfort, safety, backed up by years of experience, boasting a huge consumer base with billions in assets under management. But that legacy and security comes at a price to the consumer. Trading 212 saw a gap in the market, offering younger investors zero commission trading and a nice usable app to go with it. The question is, does this make Trading 212 any less safe? Every year I attempt to delve into Trading 212's company house documents to see if there's anything there that I should worry about. And I have found some quite important things to worry about in the past. But to be clear, I have all of my wealth in Trading 212, 163,783 to be exact, and I've been using this platform for around 5 years now. I'm part of the partnership program with Trading 212, where as far as YouTube goes, if you sign up through a link in the description below using my code, you get a free share, I think, and I get a little bit of kickback. So yes, you could argue that I am incentivized here to make this positive. But I promise you, if I discovered any red flags, my money would be out of Trading 212 quicker than a tech CEO leaving his wife for the head of HR. But most importantly, don't take everything that I say as your only piece of information when choosing a broker. I do this for my own benefit, and I write a video about it just in case it's interesting. Most of Trading 212's operations are located in London or their Bulgarian office, and that may be positive or negative based on how much xenophobia is in your blood today. I was so young. Anyway, today I'm going to take us on a quick review of Trading 212's accounts and see if there's any big red flags. These financial statements are made up to the end of last year, so a little bit out of date. They always are because they're not a publicly traded company. This is the only information we get, and it's what they allow to be released. They choose basically. Report always starts with the director's responsibilities, but it always does give this overview, and it gives us a really quick insight into just what's going on with the company. Straight away we can see a net profit of 39 million. That's up 9 million from last year. That's pretty significant. We will get into that later. And a lot of people here will notice these massive dividends that are paid out. I'm not entirely sure that these are going out to the two owners of Trading 212. If we look at Trading 212 UK Limited, we can see that the only shareholder is the other Trading 212 Group Limited. Trading 212 Group includes the CFD side of the business, which I'm assuming is mostly run out of Bulgaria. And of that Trading 212 Group Limited, the two main owners, which is Ivan Ashmanov and Borislav Nedalikov, I'm so sorry, those two guys are the sole beneficiaries of Trading 212 Group. So this dividend that's paid out here, this 13 million, actually goes to Trading 212 Group. So it might not be all of the dividends being paid out to the owners and directors. This could be that the money is moved out of the country somewhere. It could be that it's moved somewhere for like R&D or something like that. It could be just an efficient way to get taxed in Cyprus. It could be just a step away of liability. There's all sorts of possibilities why they've done that. I'm sure there's a way we could follow this money all the way around the world, but I just don't think it's that important. Page 2 details their R&D spending. They've spent 9 million this year and 7 million last year, and it shows how much Trading 212 is piling into research and development. Many will know that they added the cash ISA system this year. They've got the debit card, and the share lending process seems to be paying for the Invest in ISA accounts now. They don't seem to be relying as much on CFDs anymore. And I think this year they're planning on releasing the pension side of the business, the SIPs, and I've been told they're also exploring some options trading. It'll be interesting to see where that one goes. On page 4 we get an overview of Trading 212's performance, and if I'm honest, if this was a stock, I think I'd be buying it. Trading 212 has made revenues of 161 million. That's up 60% from the year before. Possibly the first little flag that comes up here is the expenses rose 59% to 113 million, and this is due to increased marketing activities, whatever that might be. Maybe I'm included in a very small part of that as well. This is probably the first negative in my opinion, even though it's being played off as a strength here. In order to compete with the big boys like Hargreaves Lansdown and Vanguard, they're having to pay a lot more in marketing. And you can never tell how effective advertising is. Personally, I don't feel like I've seen more advertisements for Trading 212. A couple on YouTube here and there maybe. Maybe you guys have seen more advertising out there. I haven't. This video certainly isn't part of Trading 212's budget. But while I tried to make that last bit as negative as possible, the next bit I just can't hide. I'm gonna blow Trading 212 right here. The key performance indicators are without a doubt incredible. Number of funded accounts up 79%, number of monthly active users up 92%. A lot of that is likely to do with this social platform that they've launched, which is pretty cool to be honest. There's a lot of people here sharing lots of information. No risk, no fun shares a lot of cool information all the time. Bob Shortimer is another one that offers loads of help on the forum as well. I mean 90% of it's noise, but if you head to the pie discussions part, it won't be long before you see some really good inspiration, people sharing their accounts, their account sizes, and they just let you know that either people are in the same boat as you, which is really cool, or there's people that they've done it, people that are making tons of money on here and building their wealth. Total value of client deposits are up 272% though. That is huge. Why is it so huge? It just means that more people are getting more interested in this platform and they're actually putting real cash towards it. Total value of client money is up 350%. Now again, use of the word money, I'm not entirely sure what that means. That could be cash deposits in their new cash ISA. It could be money market funds. Money is quite an interesting term that they've used there because it's the same as cash. It can be used as cash as equivalents. So we don't know what that money is. And the total client custody assets up 121%, exactly the same thing. Custody assets are how Trading 212 tends to store your foreign investments. So anything in the US, they have to give it away to a different bank and they hold the share for you while you have the right to the share. That's how it works pretty much with every company as well. So I don't know if this again means the actual shares that are owned or if it's just the money market funds that they put your spare cash into in the stocks and shares ISA or the investment ISA, or it is just your cash. It's hard to get a true definition of what this is, but they're both up quite significantly, which can only be good news. Last time I did a video like this, Trading 212's net assets under management were 3 billion. And I thought that was a really big number back then, but it turns out after a recent interview with the co-owner Ivan Ashmanov, Trading 212 has just passed a landmark 25 billion. 25 billion of assets under management. They've done that in maybe 2 years. I don't think you can get much stronger of an indicator that customers are putting more and more trust into Trading 212, that more people are finding Trading 212 to be more useful, and the zero commission definitely helps. And the more people that come on board, the safer the company seems to get because it's all self-insuring. But speaking of Ivan and this interview, he did highlight a new risk that I hadn't thought of before. Some of the risks that Trading 212 highlights in its own accounts are pretty normal, they're pretty classic. The regulatory environment, market risk, guy in their own company making a stupid mistake, credit risk, liquidity risk. These are all the main risks, and there is one brand new one that isn't listed here that may actually be the most important of all. But all of these main risks right here are pretty simple. If the market goes bad, as in the stock market goes bad, lots of people will want to take their money out and put it somewhere safer. If this happens quickly, en masse, then Trading 212 might not be able to fulfill those orders.
I've got nothing left. I've got nothing left.
But this will happen to all investment platforms, and this is the reason why you might want to go with a Vanguard or a Hargreaves Lansdown, because in theory, or I'd assume, those companies will have a lot more resilience and a lot more client backing, and maybe even traditionally better client base. Maybe those people are more likely to stay. So the legacy companies might not have as much trouble in a real bad market downturn. Those legacy brokers will still be able to take fees from those customers, and they'll be able to weather the storm much better than, say, maybe Trading 212 would. However, in the recent dips, Trading 212 has only gained more customers, so that theory might not completely stand up. But can a new lean online investment platform really stand up when things go really bad? We don't know yet. We just don't know. And that is probably the crux of all of the worries about Trading 212. But there is one risk that I hadn't thought of previously. In a recent interview, which was written in May, Ivan describes what it's like and what the reality is of being the new hot piece of meat. In truth, no one listens to this small company, even though they've taken on 25 billion in assets and they are growing their customer base massively with the younger people. It's quite a small quote, but I think it's really important. Unfortunately, nobody invites us to the table. It's a bit like not inviting Amazon in the early days when you want to have discussion about e-commerce. Maybe it's because we don't promote ourselves as a company. Now, there's a lot of positive spin on that, but the truth is the government aren't listening to Trading 212. Trading 212 is regularly ganged up on by all of the different brokers, all of the companies that still charge commission, and those companies have a lot bigger voices. It seems that this is the main barrier to Trading 212 getting their voice heard when talking to government. It seems to be a barrier for Trading 212 to influence UK finance, and it could one day become a bit of a limiter on their profitability. It's been attempted previously by lots of other companies to look into the fractional shares in ISAs. Trading 212 was probably the main target there, but changing that rule would have shot every broker in the foot, as it caused a lot of other definition type problems, and basically every broker would have suffered. So that risk to their business model is by extension a risk to my money. Do I think it's a huge risk? I don't. I think if a change by the UK government was going to affect the zero commissions trading capability of Trading 212, I would have a lot of time to get my money out. It wouldn't be a big immediate exodus. I'd probably have a lot of time to think. It would be a limiter on Trading 212's growth rather than a huge profitability drop. So I would have time, I think, to protect my assets and think. So far, I think this is the main negative for Trading 212. It's their main risk. It seems to be pissing off some of the larger companies, and those larger companies have a lot more power for lobbying next time an election comes round. Aside from that, the numbers look pretty good. We discussed the revenue previously, looks brilliant. We discussed their expenses, that also looks like a big number. And their profit is 53 million there. But when I invest in companies, one of the things I really like to see is a high current ratio. And I see nothing better than having 100 million of cash and cash equivalents on hand, especially when the total liabilities in this company are only 38 million. That means that Trading 212 can pay off all of its liabilities 3 times and change with just the cash that it has on hand. That's a really positive financial position. What's really quite interesting to see is that loan repayments are being made. It could be that they may be completely out of debt. There's some interest expenses paid there, which I don't quite understand. And I'm not going to. It's impossible to delve into any further than these finances. But it looks like, once again, Trading 212 is mostly out of debt, I think. This was previously a flag, as Trading 212 hasn't previously needed money. It was making so much money off CFDs. It's never needed any outside cash to grow. It's never needed private equity, and I'm sad to say, I don't think this company will ever go public. There's no need, that it doesn't need money. So to see it pay off even little bits of debt just makes it more resilient to me. It makes my money safer. And then of course the cash dividends are there again. I'm not 100% sure that these dividends are going straight back to the owners. I think they may be going to the bigger company and being reinvested some of it, at least not all of it, maybe 8 to 10 million after looking at the Trading 212 group dividends. Their money is excess, that's what they can do with it. And to be fair, all of that is speculation. I have no idea what they could possibly be doing with all that money. So overall, I do still trust Trading 212 with my money. I even use the debit card now because it gives you so much cash back. I'm in my 5th year with Trading 212 and I don't see any reason to hold it anywhere else. I'm particularly excited about the SIP because that might free up a lot of tax availability for me. And on Trading 212, like many other people on this app, my wealth has just grown. It's amazing to see one big community all growing their assets together. There are of course still risks, I've discussed them. Customer service could be much better. I reckon in the bigger companies you'll probably get someone on the phone. Trading 212, you just won't get anyone on the phone right away. In fact, the first hour is probably going to be AI. But it is ultimately my decision where I want to keep my money. If you've thought of any risks that I haven't thought of, I'd love to hear about it. I'd love to look into it. Just put them in the comments below. But I feel like this is my due diligence on this company. This is what I do to check that I still feel safe with all this money that's still in Trading 212. It's my responsibility and it's my choice. Ultimately, the safety of my money in Trading 212 depends on Trading 212's financial capabilities, their strength, and what their growth looks like. And so far, as far as I can tell, things still look really good.